If we go to the daily chart, what you can do is for marking out our daily and doing our top down on Monday morning or Sunday night, you can see that this Friday candle closed above the previous high. Okay. So this candle has closed above, oh, sorry, wrong one. This candle is closed above this high. So before this day even begins, I say to myself, my target for the day, if I want to continue higher, my target is that previous day high. So this becomes my target early on. So we're pretending that this candle isn't here because that's the Monday candle. And we're looking at this, and we come to our computers during New York, right, pre-market, and what you have is you have your upper target just based on that previous daily candle closing strong, closing bullish. And then you have this move down Monday. You get up pre-market and you see that, you know, at 7:30, London high is just being taken. And then if your target is higher, then we're looking for price to move higher. So that is kind of a way for me to set a target for myself, say that I'm bullish. Having us march down and create liquidity through Asia and London also lends itself to telling myself, okay, I'm still bullish because this is a perfect manipulation. And then, an expansion. So when we're talking about the candle open, high, low, close, it's not always as pretty as sort of the way that we teach it, in that when you have a candle open, say it opens here, opens at this price, it accumulates, and then you get this manipulation, and then it's not going to work like that all the time. You can get slow accumulation downward, right? And then some moves here, and then you get a move manipulation and then go higher. So it's always kind of ugly. And then the way that I kind of, you know, follow through Monday is that, okay, you get this move down, then you get sort of like this accumulation through here, and then a slow accumulation up, and then your manipulation only happens to be this really quick move down. If you're looking at it in terms of like accumulation through Asia, which it looks like, so ignore all this, accumulation, and then manipulation in London. So you wouldn't look at this as the manipulation because this is at midnight. It's not a time to trade. We want to trade in London between 2 and 3. The optimum areas to trade are from like 3 till 5. And that's when you get that manipulation. And when we're talking about like being patient, it doesn't matter what time frame you're on. It doesn't matter what time of the day you're on. It does matter what time of the day, but you have in the London session this fair value gap that forms through the low, through this low, right? And so you can see that price that comes up and bangs off it and goes higher. When this low got swept or passed through, it did create kind of the same thing. It created this, I know it's really small, it did create this fair value gap through it. Sorry, this one here. But I don't care about that because it's outside of the kill zones, the ideal zones to trade in, right? So we're looking at this open, high, low, close idea, and we're having this move down, accumulation, the manipulation in a session, and then this distribution. So what we're trying to do is we're trying to catch not the main manipulation, but in New York or pre-New York, or we're trying to find where it's going to sort of provide us the best entry. And at the open, it slices down and goes into this new day opening gap from the past. So I always mark out like 5 day new day, 5 historical new day opening gaps. That's sort of what I follow. And that there, even if that's not there, you still see this and you see the move down, and you have midnight as a confluence. And then you have, this stair step here, right? So I would be sort of on the 15-minute, whether you can catch this move, it's right at the open. That's a tough one, but then maybe we find that continuation play to the upside. So Monday made sense to me with regards to open, high, low, close. Session levels being open to take out, and then a move up. And we want to typically, if you have the open, you have a candle and you think we're bullish. And again, I said our target was higher. So this is our target, previous day high. And it doesn't quite get to previous day low. So the fact that it didn't hit previous day low actually gives me even more confidence that we could reach up to previous day high. If it swept to previous day low, then probabilities say that, only 10% of the time does it visit previous day low and previous day high. Around 10%, that's not exact. But so anyways, so that's Monday. Open, low, high, close. Okay. And then closing, I'm not even sure. I think we closed doji, like a doji candle. It's like not a very good looking candle. So, but that was the move on Monday. So let's just fast forward here. So, and then before we move on, I just want to make sure that we will go back through the day and tell ourselves before we go to that, we're going to go to the daily. Actually, let's do this. We'll put this daily up here. Right. So then you have this candle, the Monday candle, swept previous day high and closed down back inside the range. So then as I'm following my candle structure on a daily basis, I tell myself, I'll look at a couple things. Okay, I'll look at, where are we in the range? Well, we've been trading inside of this gap here. Should have done this before the start because I would have had this all mapped out. But we're trading inside of this. Yeah, there, that's better. Trading inside this volume imbalance. Okay. Please feel free to interrupt if you guys have questions. Okay. Trading inside of this volume imbalance. This daily candle closes inside the range. Okay. So now that this previous Monday target was met, this candle closed back inside of the range, not above this high. So then my target becomes this. Okay, becomes the low of that. And then as you're seeing, we've got a low that hasn't been swept, a low that hasn't been swept, and a low that hasn't been swept. And then, multiple lows down here that have not been swept. So now I tell myself as I start marching forward, we have the open and we start moving down. Okay. Asia is being created, and then we start trading higher. London's created. So now we're sitting here with an open where we've displayed straight down. Very similar to this day, where we have open, we start marching down, create liquidity, and then start marching up. Here we have straight march down, and then we have a build here where we take out Asia high, take out London high, and then at 5 we take out London low. So the only level really left for us is Asia low. Okay, so when we have Asia low left, and we end up getting a push through here, I say to myself, okay, if price happens to leave Asia low alone and just trades off of it and doesn't come back, I'm not opposed to that. I'm not telling myself price has to come back down to Asia low. But my target is down here at previous day low. And we have swept previous day high. And what I said about not trading to previous day high and then back down to previous day low, and the probabilities are low, then I start telling myself, okay, maybe the price delivery is not the greatest. And then we had CPI that day. So lots of volatility. Volatility may just kind of completely cancel out the price delivery in how I think it may want to trade, like how I'm anticipating it may want to trade, right? So what we get is this big manipulation or big move, taking out previous day high. And again, like I'm not even going through standard deviations. And I guess one of the reasons why I'm not going through it is that it's adding a lot into sort of the revenue, right? So maybe if we could do, I know we have so many different screens, I should be able to just, said I was going to try to follow ES, but I rarely do anyways. So let's just actually go to NQ and do the 5 minute. And then let's just see, because I think that we all play like standard deviations, or at least look at them, because Thomas is always looking at them and I'm always looking at them. So let's do the kilos off there and this. Oh, yeah, okay. Volume imbalance is the daily. This is the daily, NQ daily volume imbalance here. So we're trading inside of it constantly here. Now we have back inside of this volume imbalance. We have a failure to close above here on the 15-minute wicks. And then if we look back here, wicking up into, I'm sure there's something we can pinpoint further back, but we take previous day high and we take that high there. Interesting. Is that not plotting out that properly? I've had this problem before where the previous day high because this should be previous day high. Right? Am I going crazy? Because that's previous day high from Friday. This is Monday. This is Tuesday. Okay. Your daily looks different. I'm on the continuous contract. It shouldn't matter. I have this. You have to make sure this B adjust is set if you're on the continuous contract. Okay. And that button, I think it just adjusts for all the contract changes. Right, so NQH. It's still there on me for me there. And then is it because now it's just lower? And you don't have the option for the adjustive contract when you're on NHQ. Let's just see here. Yeah, it's gonna look different, I guess. Oh no. Oh, I don't have that rebound. Right. Yeah. That should be the same. Anyways, okay. Okay. So I'm on the continuous. We'll just go back to the continuous contract. Go back to the 15-minute. And then go back to. Oh, maybe it's because. There we go. I'm sorry. There we go. Okay. Previous day high. There we go. Okay. Um, okay. So we'll play this out again. All right. So we get into New York and it spikes up. Okay. Takes out previous day high, goes up twice. So again, my target is still lower. And if I'm able to anticipate a price here, so 830 hits, and then we're waiting for New York to open, we have Asia low available to us. I'll get rid of these. So as you can see, like inside of volume imbalance, the NWOG is the volume imbalance as well from back then. It just marks the candle open, the candle close. This is just different based on the daily. If you use the NWOG and the NDOG, great. If you don't, I don't think it really affects anything in regards to following candle structure, right? So, but they are areas of interest for me, and I like to have them on there just to kind of pay attention. So then at New York, we have this move then lower to take out Asia low. So in this piece of price action, I think very difficult to catch anything because you get this move up here, and then I'm not really seeing anything that I love in terms of, other than saying if I play the 5-minute, there is actually something on the lower time frame on both that we can catch. But if you are playing like a close below the candle and then a retracement up off the line, and this is the daily open. So if you were to say to yourself, okay, I want to take a short off the daily open, but I don't play the level like that. But I am bearish overall, and I do want price to deliver above the open so that I can take my short below. So we are probably the best opportunity is to short off a previous day high. If we're going to take a level, we trade below it, come back down, we're waiting for open, and then we're waiting to see what happens. 940, a little bit too early to figure it out. And then price starts to kind of fail. So the fact that this didn't open or didn't close above any of this is sort of that sign to me that price is not willing to then move higher. I would take a long after knowing that I see closes above these levels. Okay. That is the 5-minute. 15-minute, same thing. You get this move up here. I want to see closes above the high. And if anything, even, I'm not sure if it does it, but a close above there. Because I know that this wick is like a manipulation wick, right? Oh, sorry, my daughter just jumped in. I'll be right back. Sorry about that. My room's like right next door to my daughter's, and she just woke up. So, okay, so when we're not getting those candle closures above like highs, the CPI wick, I'm to wait for a closure above that. You might miss a move, or it might be, I don't know. That's what I'd be waiting for, like price to start closing above these levels, and then we don't get it, and then you get the move down. So the 1 minute, actually, when you're looking at it, this is actually a really nice move here at 8:30, where it comes down, forms this new retracement, and then what I'll do is I'll draw that box around that retracement, and I'll take anything that taps inside of that box inside a fair value gap. So I don't need it to come all the way up here. If there's fair value gaps, I'll take it this way, or your inverse fair value gap. So these are two different entry models. So if you're working out a fair value gap and seeing that it's been inverted, you see that this row of down close candles, so I would mark that out as like a 1 minute order block, right? So that's like an order block because it was displaced away. Then you get the, I usually do purple for my inverted fair value gap. Okay, so you get the inversion, that's a bearish sign. You get a break below here, the order block. So these lows are getting closed below here, and then that's kind of my sign that, okay, we're starting to go lower. So you get a retracement up into these areas that we'd be using for a downward move. And then if you miss that on the 1 minute, then you're looking at all the swing lows that now are getting closed through. And you get this one closed through, retraced up. That's the opening level. This could be then, now you could be looking at something like this as your 1 minute sort of order block, where price moved swiftly away from this candle, creates a fair value gap, comes up. You may take the fair value gap short, but you see that it comes up and at least doesn't break above here. So I wouldn't want to start seeing price then closing above my swing highs. So I don't want price coming back up here to break that high. I don't want this broken and then this, right? So 1, 2, 3, price comes up, moves down, and then potentially one more opportunity on the 1 minute here where it breaks below, right? And then you're just trying to find like a PD array where it might want to come back up and go down. But that's the 1 minute. So I'm, let's go back here to the 15 minute and just kind of follow price. So those are the opportunities on the smaller time frame. And the 1 minute was the best. But if you do follow the 15 minute, then there might be not an exact place to enter on the higher time frame. But there is this failure to expand above these levels and close above highs. And then this move to this, when I see one up and then one really strong down, then sometimes I'm even taking just a simple retracement of this down close candle. I'll wait for like 25% or 50% and maybe wait for it to retrace to move lower. So, and then off of this level here, and then off of, well, really nothing else. But the idea has kind of played out where I was bearish. My target is way down here. Okay. And I get a move, lower, but I don't obviously meet my target. And today, and that was a news day, and there was a lot of volatility, right? So if you ended up taking a short there, you're taking it, in my opinion, you're taking it to your lows. So I probably would have partialed here and then aimed for here, and then, anticipating or hoping that we go all the way down here. Um, so hard day to trade in terms of follow through, and a day where I think on the news sometimes you want to expect follow through, but doesn't happen. So okay, so let's rewind here, take away some of this, and then now we are looking at Wednesday. Wednesday we had core PPI, all 8:30 news. So let's kind of run through the day and see how everything develops with our session levels. So we get, oh, and again, our daily. So we're looking at our daily. We get a sweep of the high. We don't get the target met, but we do then close back inside of the range. So my target remains the same. I want this lower target, and I want this target too. So this would have been also a target if we started here. So as we open up, what my target on the daily is here. That's my first target, and then the lower target from the day before. So I'm expecting that we are turning from this volume imbalance to go lower. And so we have our daily open here. So we open, we do move higher in Asia. And this is that crazy day where it created all of these highs, and then kind of just left. So if you were trading Asia and London, you may have gotten a move right after that London high swing through here. If you're trading London, so London developed and then it took out the high and then started moving down. And it's if you trade London, and then you get that straight move down through after actually like through 5 o'clock. So then one of our targets is met already. And this is the day where we bounced off a previous day low and just plummeted, right? So that those lower targets, 1, 2, 3, all met, right? And this is the play. If I don't know if you guys were watching this, but a very important signature to watch, and it just happens that it matches up with previous day low, but you want to watch for the fair value gaps to be created through lows or highs, and then a move off of that. And if you compare it up with a level like previous day low or the fair value gap, and even more so, this is the 15-minute. If we're doing the candle structure and we're following it, you have this green candle close below, and then you get a move up. This is kind of technically our order block. All right, and then at 9:30 you get that move up into it. And if you go to the 5-minute, that's a fair value gap. That move there. Okay, so that moves down. Let's stay on the 15-minute though. We get a close below, move up into a fair value gap, and then a move down. Okay. So we are getting these moves lower based on the where our target is. And then let me see what the day is here. All right, there we go. So then those would be our plays there that we were looking for, but our targets are being met, right? So those lower targets are being met. And so now what I'm looking for, now that this daily candle has been created here, we have a close below these candles, the previous day candle close below. So then my new target now becomes way down here. So that's my new target. And then I'm also considering the range. I don't want to go over 617. Sorry, Terry. It's like, yeah, it's so funny. It's a point of interest. I'll show you when I'm done here. I'll show you how we found it. And it was, yeah, it's, I don't know. It's something that you would have to sort of monitor all the time. And there's multiple levels, and it's just so funny. I think it's like half coincidence, but half not, right? So, so just by following the daily candle and creating those targets for yourself, you can sort of anticipate where price is going next. So that's kind of like the main lesson for me from this past week has been really just kind of following. Yeah. It's not stupid if it works. Yeah. So here we're on Wednesday to Thursday. So I'm just going to speed through these and really play them out and then kind of tell you what I saw, because we're on Thursday. Usually when I do these reviews, I don't get through the entire week because I start getting into like some finer detail. But today I wanted to focus on some of that open and then anticipating where price was going to go. So even though we had this target here, I'm watching and waiting for price to do like a move higher to then catch us lower. So through Asia, London, we wake up and then we're already here very high in the range. And so in my mind, I think, well, I don't think we're going to expand any further. I think we're probably going to go lower to meet this target, or to go lower to at least 50% of the daily range, right? It's another thing. Previous day EQ has been working out really well as in terms of targets. And that's also something I'm not really plotting, but today I'm going to plot it because I can't remember exactly if we get it going back. But so at the open, previous day high, same sort of thing is happening here, where we're getting a failure to expand above that, but we're not closing below. Like, this is all green, and I kind of want to see a close below there. But as soon as I see, see if we can catch it on a 15-minute. So shorting previous day high, we're high in the range. I really don't remember what happens here. Fair value gap created on a 15-minute retracement. And then you start to get that move down. Okay, so it comes down to previous day Q. So previous day high to previous day Q was basically the move there. So we got to London low almost. So we're not getting that deeper target, and I'm okay with that too, because I'm maybe not always expecting a massive move. But if you could have formed something on a shorter, like a smaller time frame here, with the 5-minute. So after this standard deviation was created and went on lunch, I don't know. I don't follow lunch standard deviations. So, but this was pretty ugly all through here. And until you got like this move lower and then a move up still. I can't remember if I took any trades Thursday, but that was a pretty dicey day, just kind of hanging around previous day high. But if you just took a previous day high short, because we were high in the range, anticipating it was going to go lower, it would have worked out for you. So just didn't happen in the morning as quickly. I mean, it happened and then came back up and then continued lower, right? So Thursday we didn't get that target, and then let's just quickly bolt through Friday. Can't even remember what happened yesterday. There you go. Okay. So this daily candle here on Wednesday closed inside the range, swept the high, closed back inside. So when price opens up, I'm still targeting lower, but you kind of have to just play what you see, and the play definitely was your standard sort of open, high, low, close candle where you open, create liquidity, and then in New York, oh, I remember this was actually like a really good. It was on the 5 minute. So when this opens up and sweeps this pre-market liquidity, you start to follow the candle structure. So take everything away and just say, okay, we're high. We have Asia low, London low below us. You get manipulation and a failure to close above that high here. So candle's not closing above. And then you also have within that, you have the candle starting to fail. The second you start to see that this candle doesn't close above and it's starting to curl, you watch this candle's low, close below, and then a retracement, and that's where you take your short. Would be this, call it a breaker block, but it's not very clean. You go to the 3 minute, same thing. So that's kind of how I would gauge that. 5 minute, you don't really get any, moves back up into a fair value gap. On 1 minute, it's still kind of dicey, but this would actually be like, for me, sort of that continuation, OB continuation play would be something like this. In between here, you can take a short at 50% and see if it works out. Yeah, those close below the same things. So that's on the 1 minute. 2 minute, like really dodgy, but then you get this first fair value gap that gets presented on the 2 minute move down. So if you're just playing sort of your confidence in price going lower from there, but I thought I played the 15 minute on that play because it swept, created this very nice engulfing candle where it took out the low and then retraced, and I shorted right around here. But I got out super early because that's something I'm working on. So, okay, cool. So that's basically the week. I hope that kind of made sense in starting to mark out your open, using the daily candle for your targets, and then saying to yourself, okay, if I do want price to go lower, I want it to be up here during New York first to then sort of hit our target. I look for previous day high to EQ levels or previous day low back to EQ levels. And then the gaps, start paying attention to the new week opening gaps and the new day opening gaps, because if you have them marked out on your chart, I know that there's a lot of them on here. But if you're in New York and you see a gap here and you start to see failure there, there's maybe an opportunity. If you start to see price, not want to continue any further, then maybe there's an opportunity there. Same with being down here, same with being up here, right? And time of day matters too, right? So down here, good example, that's during London. So a good example of that. Here you get, you know, a blast through it and then comes down and taps into it. So these new week and new day opening gaps are good to follow. There's a ton of indicators online about, or on TradingView. So okay, 617. Let's do it. Okay, I don't know if you guys, if anyone follows. Oh, before we go on, is there any other questions about what I went over? How I was following everything? I just made 2 videos, one about the daily candle and the other one about the hourly candle, kind of following them. So watch those if you're kind of confused about how I set targets based on the candle closes. Maybe ask Gannon, maybe, and see if he's okay with it. I'm sure he is, but you can if he's okay with it. I'm trying to make them short. I want to make them like the ideal 15-minute max would be ideal for those, for all of them. So I can, you know, I passed a little bit, but okay. So I think we did the monthly. So if you don't know what volume area high, volume area low, and point of control is, I don't really know. It's like, basically it's a way to show you within a time range or a session range. It's this indicator here, fixed volume profile. And what it shows you is where price spent the most amount of time based on volume, and then the height and the low of it. Okay. And you can do it for any range, and you can do it. So you can do it for a daily. And what you do when you do it, you mark out, you don't use it within the time frame, you use the previous one. So in this day, I'd be using this. Well, this one is based on the daily. So it's from Tuesday open to Wednesday close. So when you mark it on the daily, you follow it during the next day, and you can see that out in time, price maybe has a reaction to this level here, right? It comes down, stops there. Here, the next day, it kind of has a reaction to it, pops above it. And then on a smaller time frame, maybe you're able to catch a break and retest, right? So here, breaks it, and then comes back down, retests it, and goes up. But what we found was, the one that we looked at was a monthly. So it was like, let's get rid of that. I think it was October. So I think we went back in time to October. So October 1st. Right there. So then what people will do is they'll put their volume profiles on here. They'll mark the levels. And they'll keep them on there, right? So they'll keep them on there through time. And then you can see like bounces off, comes down, trades underneath, bounces off, comes above, bounces off, comes below, bounces off. Right. So he just left one level on, I think by accident, and erased all the other levels. So this point of control, you can see it bounced right off that point of control from there, right? Let's get rid of these. So then if you were to do that again for the next month, Sunday to, is it reversed? Erase this one. These lines. Then you can see you don't use this inside this because it hasn't developed yet. When you see this being used, you see this being used here. A little lower, you see this being used to bounce off of. Right. So those are that's value, volume profile. You can do it for the monthly and then you follow it for the month, or you can do it daily, you can do it weekly. So that's basically what volume profile is. So. Yeah. And I mean, I've tried to throw it in once in a while, but again, one of those things where I would rather do it on a higher time frame. So you do it a week out or the month, and then you say to yourself, okay, I'm waiting for price to come to here. And once it does, then I'm going to, from the 4 hour, go into my 15-minute for a setup. Right. And, price comes down to here. That's the thing when you get to a smaller time frame. This is what it ends up looking like. And you're through Asia, and that's when it finally does something. So you're not trading prop firm intraday off of a monthly profile, potentially, right? It might be better to just sort of stick to a weekly if you're going to look at the weekly, but it's just this fixed range volume profile. And I've also seen people use it for individual ranges too. So if I were to take this range, let's do, like from here to here, they see this range. They set it from here to here, they see that price starts coming down. And then maybe they're using this as like, okay, we start trading below that. But I don't know. I would, if you're going to go down that rabbit hole, go and watch somebody well more educated than me on volume profiles. So, cool. So that was sort of the weekly outlook based on open, high, low closes and where to set our targets. The whole smooth body thing was pretty interesting, based on yesterday's price action. Marking out these smooth bodies is on a higher time frame really important. Yeah, that's right. You can set it for different percentages. So if you ever see this on the 1 hour or the 4 hour, I would mark it out. Very important. And then it was also in that level, I think there was inside the new week opening gap, one of the old ones. And then there was one more thing I thought that was up in that range. I guess it was just the order block through here, if you call that the order block. right here on the, what's the 15-minute? If you go with the hourly, not so much, but you can see their liquidity is grabbed. So the idea behind the smooth body is that like that's a candle that didn't get a manipulation leg. So there would be a lot of liquidity left there. But I've seen them left and not traded back to for a very long time. I also have an indicator for 2 works. But anyways, they don't happen that often on the higher. Oh, right here, this one. So this is where we were joking about it with Thomas. And then I was showing like, okay, cool. You may think that it's going to come back up, but it doesn't. And then eventually when price comes back, it hits it, but what does it do? It doesn't reject off of it. So if you try to take a short and you weren't, sure, 40 points or whatever. But you can see that price traded above it and then kind of around it. Whereas this one came down, came right back to it, and then just rejected hard. So these smooth bodies don't necessarily mean that you're going to get a rejection off of it. But I also look at the ranges here. So it is 7:30 here, and I hear my daughter still awake, so I'm going to have to call it quits. And if you guys have any other questions, you can send me a message, private message, and DM me, and I can answer anything or set up a one-on-one with me too. I'm happy to go over stuff one-on-one with you guys. So, cool. All right. Have a great weekend, you guys. Thanks for joining me this morning. Oh, don't apologize, Terry. It's all good.